this. Morgan Stanley out with a warning on the U.S.-China trade war. An analyst at the brokerage warning, quote, if talks stall, no deal is agreed upon, and the U.S. imposes 25% tariffs on the remaining $300 billion of imports from China, we see the global economy heading towards recession. Doug Flynn, certified financial planner and co-founder of Flynn Zito Capital Management, joins us now. Great to see you, Phil. Okay, so we have a prediction of a global recession if nothing gets done, if we continue to be stalled with China in this trade dispute. What are your thoughts on that, Phil? Are we headed to recession in that scenario?
Maybe globally they're talking. In the U.S., definitely not. I mean, this is probably a 0.6% hit to our GDP at this point, even if all the tariffs are on all $300 remaining billion.
That's it.
That's it. And so 0.6 is not going to send the U.S. into a recession. Now, it may turn parts of the different parts of the world into a negative, but the definition of recession is 2 negative quarters of GDP, and that is not happening in the U.S. anytime soon, and this isn't going to affect it either. Well,
Doug, I'm sorry, I think I called you Phil.
That's
Doug,
okay.
I will get it right, and I apologize for that.
No worries.
But certainly, if the longer this drags on, the more companies are being holding back on capital expenditures, on really planning for the future. I feel like a lot of these companies naturally are not going to do anything until this thing gets resolved. So surely the impact would be greater than 0.6%.
Well, look, we're talking about $100 billion of cost to a $14 trillion economy. That is also not enough to change the entire picture of the United States. Are certain parts of the economy going to be impacted? Absolutely. Supply chains going to be impacted. People are going to have to make decisions. But a lot of these people made decisions to stay with China when for years and years there were better and cheaper options to move to, whether it be Vietnam or India or other places. And that can still happen. So, China has to be careful here. While this is certainly important, and it's, China represents less than 1% of our exports, we're almost 5% of their exports. So they have more to lose than we do. And there are certain companies that are absolutely going to get hit here. Yeah. But in the big picture, it's not enough to change the dynamic U.S. economy that we have going on. That's going to continue.
And from an investor point of view, how do you play this? It seems like with every differing headline, markets can take a big leg down or they can come back again. I mean, obviously the volatility is up, and I know that can provide opportunities within itself. But how do you play this?
Yeah, so I think people are looking at the China as the reason, or the tariffs as the reason right now the market's a little volatile. But in reality, when you just spring back 20% up after being down 20% at the end of last year, a little fallback to 5 or 10% is not an unreasonable expectation. In fact, on average, we have 3 to 4, 5% drops in a year. We haven't even had one yet. So I wouldn't even be convinced that coming down 5 to 10% is attributable to this. You have to take the long view here, and that's what Trump is taking, is the long view. And in the end, do you end up better off? And I think we do, and that's the problem. You have to just work through it in the short run, and that's a tough part. People aren't used to that.
It's exactly right. We just have to get to the finish line. Doug Flynn, thank you so much, Doug. Appreciate your time.
Absolutely, Ashley. Take care.